In this market update, I'm going to be talking about the futures market, the largest market in the world. Hi, Jim Gore from THOR Wealth Management. Everyone talks about the stock market, but there's a bigger market out there, and that's the futures market. It actually, if you look at this chart here, it includes stocks and stock markets. You can actually buy futures on the S&P 500. You have interest rates as well as currencies on the financial side. You have as well precious metals and copper and silver and those sorts of things. Then you have your food items, which are your cattle futures, and then you have wheat and corn, and then you have energy, which is like natural gas and oil. And these are very important markets, and they were set up really for a lot of these producers. For example, if I'm doing a long-term manufacturing product where I'm selling something to Europe where I'm going to be getting paid 2 years from now, I might lock in today by having a future, selling a futures. I'm locking in today's currency rate. So that way I won't have to worry if the euro goes down versus the dollar. I'm going to lock in those rates. Same thing if I'm a producer. Farmers, very sophisticated farmers use the futures market. They can go ahead and they know that corn, they lock in the futures. If you did that 6 months ago and you were a farmer that did that, you made money on your futures, but guess what? Corn prices are down about 40% this year. You lost money on producing it, but you made money on your futures. So net, you actually make money. So futures market is very important, but also a lot of trading is going on there. Just in 2022, we saw an increase of almost 15% in futures trading. But you have to understand that this is, very, difficult market to understand. You have to understand what you're looking at. And there's two main terms that you have to know. First is Contango. Contango is what you would see more naturally, where the current price is lower than the future price. And, you kind of figure, hey, this is, there's going to be costs in the future for delivery, for more things down the road, interest rate costs. And that's more what we see as normal, where, the current rate is lower than the future rate. However, there's some markets like the oil market that trade more in what is backwardation. That's the current price is higher than the future price. And the reason for that is that it gives an incentive for producers to produce more oil. And that's what we're seeing in the United States. We've seen production actually increase over the last 14 years. We're doing over 13 million barrels a day. And that's because of the futures market. I'm getting incentivized today to get more oil out of the ground than produce it in the future. And oil, usually it's about 80 to 90% of the time is in backwardation. However, let's look at, this is a futures contract of oil, and it's August of 2026. And you can see that when this futures was trading back in 2020, remember, that's when COVID hit, and we actually saw the current price for oil go down to a negative $35 for a barrel of oil. They couldn't get rid of it. And so what happened was, it was a negative 35, but look at the futures, it was $45. So think about it, if you had a well back then, would you have gone out and drilled that well you're going to lose money on, or would you hold that well and drill later down the road when you can get $45, $50 a barrel? You would actually hold off on drilling. However, look at where we are today. Today, you're looking at the spot price is $76. The future, you're going to get $67 in August of 2026. So your incentive now is to drill because you're getting $9 more a barrel drilling it out of the ground than keeping it in the ground and trying to sell it 2 years from now. But one thing is very important at this chart. There's been a seismic move that people have to be aware of in oil. As if you look back at the futures up until the last 4 years, the futures were about $50 to $55 a barrel. Now we're close to $65 a barrel, and that is a major move up, and it stayed up there for futures. And there's a reason for that. And Part of it is if you look at our strategic petroleum reserves. What happened here is the strategic petroleum reserves was being added to. Then Russia invaded Ukraine, and we took over 350 million barrels of oil out of the strategic petroleum reserve. And we're slowly adding that back. And so, as a matter of fact, the last purchase of 4 million barrels of oil was at $77 a barrel. So what's happening is that is causing more demand for oil, and that's why we've seen a shift up in the futures, permanent shift up, I believe, until the strategic petroleum reserve is actually replenished, which could take years into the future. But what I wanted to just do in this video was just give you an education of what's going on in the futures. I mentioned in the last market update that commodities is an area that we're looking at that we think is going to do well for the future. But you buy those in futures in a lot of cases. And this is why having futures as part of your portfolio in this market is very important. If you have any questions or concerns, as always, reach out to us at THORwealthmanagement.com or give us a call. Take care and talk to you in a couple weeks.